Do you know what time it is? Monday. Well, it's not Monday here in Australia anyway. Market update time, silver time. We're going to look at a few other stocks as well too. Market update time. Let's get straight into this video. Do not place a trade based on this monkey's video. All right. You know, because trading is risky and that can cause substantial financial loss. Do not be placing trades, any trades based on this video. All right, guys, if you're interested in some free training, if you're interested in I'm running a webinar. The very first link in the description, I'm running a webinar on the 7 secrets to help you achieve a 90% success rate. Go click on that link in the description right now and register for my next webinar. All right. Let's actually get straight into today's session. Now, before I start today's session, guys, I want to talk about something here. A lot of people bust my balls about a few things. Firstly, guys, if you guys haven't actually done so yet, guys, this here is my Share Trading Mastery. So facebook.com/Share Trading Mastery is my Facebook page. I don't post on it all the time, but I'm going to start posting on that a lot more from now on. And you can see that I've got a lot of stuff here, but I just posted something just recently on my wall, and I want to talk to you guys about this here. So as you can see, I post every now and then, guys, on my wall. This is a video from Tony Robbins and so on and so forth. So if you're interested, guys, links in the description. Dog's barking next door. So I want to share this with you here before I start. If trading is a source of anxiety, fear, frustration, depression, or anger, something is wrong. All right, okay? You have to enjoy trading, because if trading is a source of negative emotions, you have probably already lost the game. Jack Schwarzenegger, the new market wizard. Now, some of you guys can see, right, I have fun with what I do. And you've got to have fun, right? There's so many people that are negative around this whole market, right? Negative around the markets, and they're not really positive around, they don't really have fun and all that stuff, down home country goodness. You know what I mean? And that's where, like, with me, guys, I always like to have fun with what I do in my videos, you know, like in my videos in market itself. Because the thing is this, guys, once you know how to trade the markets and you can see how you can get ahead, trading becomes fun. It really does. It's like, you know, now, yes, obviously trading, when you're in the mix of being in a trade and stuff like that, you're not sure what's going to happen to the individual trade. Yeah, of course, right? Even my heart races sometimes when I'm in a trade and so on and so forth. Make sense, guys? But generally my heart races when I'm in a trade, only because I've got too much risk on that trade in my time. That's what happens. But when I don't have a lot of risk and I'm happy with the risk, then things just work out quite nicely. So that's what I want to talk to you guys about that. You know, some people having a go at me about being that dog next door is going nuts. I want to kill it. Let's get straight into the markets, guys. Let's have a look at the Dow Jones Industrial Average. Continue to race up, guys. We are gapping. It's now made 3 gaps in this. The Dow Jones has now made 3 gaps. And if you guys, there's 3 types of gaps. There we go. Am I control? There we go. Anyway, so the Dow Jones has made 3 gaps on the way up here. This one here was a breakaway gap. This one here was a continuation gap, and this one here is likely to be an exhaustion gap. So the 3 types of gaps that generally appear when the market starts to move up. Now, this may or may not be the case, but generally what happens after, as the move's been going up, if you get 3 different gaps, they're the breakaway gap, continuation gap, and exhaustion gap. Now, sometimes I actually thought this gap here, right here, was the exhaustion gap. Make sense, guys? I thought that was the exhaustion gap. So that's what I see through there. So moving forward, guys, I actually do see it, and I do say, guys, right, warning, market reversal. Like, I do believe we're likely to start seeing a pretty decent reversal out of these markets, only because we actually, market pullback about to happen. I really do believe that, but only because we've just been going so high and so far, so hard. Be very, very careful, guys, about the markets and what's happening with the markets and so on and so forth. Be very, very careful out there. Same with the S&P 500, but the S&P 500 has only had 2 gaps. And you can see what's actually happening, another gap up. We are really going through a bit of a blow off, aren't we? It's like a blow off top. And what I mean by that is, if I go to my line chart, I go to my weekly chart. Actually, if I go to my monthly chart, I'll share with you what I mean here by a blow off top. you can see here, guys, right, that if I squeeze my chart up, you can see here that obviously we went through a big booming market ever since 2009, right, and to obviously 800 to 2000, and then we went sideways. And as you can see, ever since this monthly chart, and let me bring up the Dow Jones because it's actually a bit more. Look at that vertical move there, guys. I don't know about guys. Watch out. We are seriously getting ready for a big reversal. Big pullback. Major reversal is about to happen in the markets, I believe. I know. What sort of fear title can I put on this video to get people's attention? Look at that. Just look how vertical that move is, guys. That is not sustainable. All right, month after month after month, we've seen that. And whenever you see a vertical spike like that, guys, that's only going to equal one thing: big reversal. Now, that's not going to happen in one day, okay, guys? So I don't think that's going to happen. People say to me, "Oh, John, the market's going to crash. It's going to go down 20% in one day." It's like, no, it won't. It's like they have, it's not like the 1980s. Because it's not like the 1980s where the market just sell off. Right now they have limiters, and limiters is simply this. Back in the day when I was heavily trading the E-mini S&P through 2008, when the market was down 7%, as soon as it hit 7% down in one day, as the market was selling off 7% in one day, what would happen? The limiter would kick into it and then stop it. It will actually slow down. Now this is on the indices. Stocks are different, but on the indices, say the S&P 500, it'll actually, then the stock exchange will actually go through a trading halt, and the whole thing will go through a trading halt, and then after a while, then the market will open up, and then that generally stabilizes it. So that's the reason why, guys, like you won't get big 10 and 20% drops in the market. Now, yes, you can get a 7% drop in the market, and that's still possible. And if we did get a 7% drop in the market, that would be, that would be only around about there on the S&P 500. If we go to say this chart here, if we did get a 7% drop, a 7% drop would equal down here somewhere around this level through here. So definitely not. You definitely won't be getting a 20% crash in one day, because as again, guys, what happens is that the limiter is going into the markets. They'll stop it at 7%. If then after half an hour or so, they open it back up. If it continues to sell off even more, then they basically just shut it down for the whole day, and then reopen it again tomorrow when everything is calmed down. So that's the reason why, guys, even through 2000, even during through 2008, we didn't get big 10 and 20% drops in the indices. That is, stocks, of course, right? We had massive 20 and 30% drops, and it happens all day on stocks. But with the indices, that's what they see through there. So anyway, guys, that's what I see through there on the markets itself. The indices. Let's go again, guys. If you look at this here, this is the monthly chart on the Nasdaq. Look at this move here. The last time we got a big vertical spike like this was when? Looks like the tech bubble, right? Major reversals about to hit the market, guys. Warning, reversal. Let's actually get straight into now silver and gold. So let's have a look at what's happening with silver and gold. So silver and gold looks like it's starting to really top out a bit here, isn't it? Like you got this, that's the HUI. Let me go back here to, that's oil. Here we go. So gold. So what's happening here? What's happening here with gold? Let's go back to that weekly chart. And as you can see, guys, right? If I open up my weekly chart here once again, if you just go back and have a look at all the low, high. This is now a high low. I believe we're likely to still hold here for a while, and I believe we're likely to start moving up from there. Especially what's happening with the indices right now, guys. I believe we're likely to start getting a pretty decent move in gold and silver, because I think we're likely to start seeing a pretty decent pullback in the markets. And now you can see also what's happening here on silver as well too. Silver actually was a crazy one, right? Silver was a crazy one. It had a big up day and a big down day, I think it was SLV, was it? GOD. It was one of those. So yeah, so we can see that there with silver, and yeah, that was silver. That was gold. So this is gold here. So gold with the same thing, guys, right? Gold actually had a pretty decent run up, and now we're actually pulling back again, having a down week. So, but again, guys, I still believe we're likely to hold here with gold. I do believe we're still likely to see this rally up and out. Now, I still have my long-term options on this one, which expires at the end of next year. And I do believe over the next 12 months, we're likely to see a pretty decent run out of pretty decent run out of gold. And that's the reason why I've got my my long-term options with that one as well too. So there we go, guys. That's a little market update for you guys. Hope you have an amazing day. And yeah, guys, as I said before, when it comes to the let me bring up this time frame here. When it comes to the indices, guys, just be careful. Just watch out. Watch out. You know, watch out. Watch out. Watch out. Big reversal is about to hit the markets.